Alright, good day class. You are welcome to this edition of online class. Last week, we looked at the topic trading profit or loss account. And under that, we look at the origin, how it started. And also we look at the meaning of the subject matter. We look at the importance of trading profit or loss account. Also, we also look at the basic terminology in trading profit or loss account, such as opening inventory or stock, purchases, sales, return inward, return outward, expenses, carriage inward, carriage outward, good withdrawn or drawings, and so on and so forth. Now today we are going to look at how to prepare the account. Remember, I gave you the format on how to prepare trading profit or loss account. Today we are going to look at illustration 1. Please mind you, trading profit or loss account is as old as man, and as such it's very simple as ABC. So please follow me, and I bet you will enjoy the class, and the class is going to be stupendous in practice today. Now look at illustration 1 on the board. They say the following information were extracted from the book of John Prominent, Nigeria Limited, as at 31st December 2017. Building 50,000 naira, motor vehicle 40,000, sales 100,000, insurance 20,000, purchases 50,000, office expenses 4,000 naira, office expenses 4,000 naira, carriage outward 3,000 naira, wages and salary 11,000 naira, discount allowed 3,000 naira, opening stock or opening inventory 22,000 naira, bank interest received 1,000 naira, bad debt 500 naira, return inward 2,000 naira, return outward 3,000, return outward 3,000 naira. Now additional information. They say closing inventory, closing stock is 12,000 naira, and at the same time, outstanding wages is 2,000 naira. Prepare insurance 1,000 naira. Depreciation on building is 20% per annum, while depreciation on motor vehicle is 10% per annum. You are now required to open or to prepare trading profit or loss account. Now, the first thing you need to do is that you bring down the name of the company. The name of the company is John Prominent Nigeria Limited. You bring it here, John Prominent Nigeria Limited. Then what are you planning? Now, the name of the account here is what? Trading profit or loss account. Like I said last week, the first thing you are going to write down is opening stock or opening inventories. Now, when you look at this place, this is the opening inventory. The opening inventory or opening stock is 22,000. You bring down opening inventory 22,000 naira. Opening inventory 22,000 naira. Hope you are following, right? Let's move forward. After your opening inventory, you add purchases. After your opening inventory, you add what? Purchases. Now from the question, when you look at this place, this is the purchase. Purchases is 50,000 naira. We have purchases to be 50,000 naira. Purchases is 50,000. You now come to this place. Purchases 50,000 naira. Is that taken out? Then after your purchase, you now have check, is there carriage inward? Because carriage inward is the amount of money you expended in bringing the good you purchased to your company. Now check whether there's carriage inward. Now let's check whether there's carriage inward. This one is carriage outward. We are looking for carriage inward. Here we don't have carriage. We don't have carriage inward. The one we have is carriage outward, so we don't need it at the trading account. Now, since there's no carriage inward, then you search for return outward. Check, is there anything like return outward? Return outward, yeah, we have return outward to be 3,000 naira. Then you let's return outward. Let's return outward. Return outward here is what? 3,000 naira. You come to this place, 3,000 naira. So 50,000 minus 3,000 naira. What do we have? We have 47,000 naira. We have 47,000 naira. Now this 47,000 naira, bring it here. 47,000 naira. Add it to opening stock. 47 plus 22, you have 69,000. 22 plus 47, we have 69,000 naira. And the name of this is what? Cost of goods available. Cost of goods available. Cost of goods available for sales. So that's the name of this. Cost of goods available for sales. So here we have cost of goods available for sales to be what? 69,000 naira. So the next thing we are going to do here is to look for closing inventory. Is to look for what? Closing inventory. Now, looking at the information provided, we have our closing inventory under illustration 1. Our closing inventory is 12,000 naira. Now you come to this place, less closing inventory or stock, closing inventory to be what? 12,000 naira. When you less it, you have what you call we have 57,000. Now this 57,000 naira is what? Cost of sales. Cost of sales. This 57,000 naira now is now your what? Cost of sales. You can see it right now. 57,000 is now our cost of sales. After cost of sales, you stop. You come to the credit side. The first thing you bring down is your sales. Me are looking at the question, our sales here is 100,000 naira. You bring down your 100,000. What do you do again? You less your what? Return inward. Less return inward. Less return inward. From here, our return inward is 2,000 naira. You less return inward 2,000 naira. Then you have 98,000. Do you know why we are deducting return inward? Because return inward means that you are, maybe customer came to your company, he purchased 20 packets of a particular product, and he now return 2 packets or 2 dozens. Now you are going to deduct it from, because you have recorded it before that you actually sold 20 dozens of your product. Since customer now is now returning 2 dozens, you are going to deduct that portion that the customer is returning back to you from the one you have recorded in your book as your sales. That's why we are deducting the return inward from sales. Now this is our net sales. This is our net sales or revenue. Then for the next thing is to determine our gross profit. Gross profit is the difference between net sales. Here now is our net sales. Our gross profit is the difference between net sales or revenue and the cost of sales. Now if net sales is more than cost of sales, here is gross profit. But if the net sales is less than the cost of goods sold, then it's net loss. But in this case, net sales or revenue is 98,000, and here cost of goods sold is 57,000. It means that we have net gross profit. You now say 98,000 minus 57,000. We have our gross profit. Gross profit. So 98,000 minus this, we have 41,000 naira. Our gross profit here is 41,000. That is 98,000 minus 57. We have 41,000 naira. Then you have 41,000 naira back to 57,000. What do we have? We have 98,000. Bring down 98. Opposite direction. We have 98,000 naira. So what we have done so far is what we call trading account. We have done the first one, which is trading account. From here to this place is trading account. The next thing on our agenda is to determine our profit or loss, to determine our net profit, and it's very simple as A, B, C. What are you going to do? Just look at me and listen. You see, very simple as A, B, C. Now, our gross profit here is what? 41,000. So we are going to bring your gross profit down here. You now say what? Gross profit gross profit brought down, we bring this one down here, 41,000 naira. Is that taken now? You bring your gross profit down, we have 41,000 naira. Is that taken now? Now at this point, all you need to do is to what? At this point now, you bring down your gross profit. Now here you put expenses. Now what are the other expenses here? Other expenses. Now let's check from the question. We have building. Building is an asset. It's not an expenses here. We are not going to use building here because it's an asset. What we are using is expenses and income. We have motor vehicle is an asset. We are not going to use it here. Sales, we have done that. Insurance is an expense. Insurance is what? Amount of money paid by the company to insurance company to what? To transfer their risk to the insurance company in order to reduce the burden of risk on the business. So insurance is an expense. So insurance is expense in this account. We bring down insurance. How much is it? Insurance is 20,000 naira. Insurance 20,000. But remember, they told us something here in additional information for they say prepaid insurance is 1,000 naira. Sorry, prepaid insurance is 10,000 naira. Prepaid insurance means that prepaid means the amount of money you pay now, which is meant for the future. Is that taken now? You like maybe you are into an apartment and your house rent is 100,000 and you pay 200,000, means you have paid for 2 years. You have paid 100,000 naira for the next year. Such amount of money is not meant for this period. Then what I want to do, the treatment is to deduct the next year payment, which is 100,000 from the 200,000, to know what actually belongs to this period. What we are going to do now is what? The insurance says 20,000. 20,000 naira minus prepaid insurance 10,000 minus 10,000 naira. So 20,000 minus 10,000 naira, we have 10,000 naira. We have 10,000 naira. We have 10,000 naira. So you less it. It's 20,000 minus 10,000. We have what? 20 minus 10,000 naira. We have what? 10,000 naira. Is that taken now? Now the next thing, purchases. We've used purchases. Office expenses. So it's office expenses. You know that what we are bringing down is we are bringing expenses downward. You bring your office expenses. Office expenses. How much is office expenses? It's 4,000 naira. So you now check additional information whether there is information relating to this office expenses. When you check to this place, we have stock. It's not related to office expenses. Outstanding wages is not related. Prepaid insurance is not related, and depreciation. So it means now no additional information relating to this expense. So you now put the value straightforward, no adjustment. How much office expenses? 4,000 naira. You bring down your 4,000 naira. So the next one will go down a little bit. We have carriage outward. Carriage outward is the amount of money you expended in taking your goods to your customer. The amount of money you spend taking your good to your customer who actually want to buy your good. So it's an expense in P&L account. Therefore, where is this? Carriage outward is 3,000. It's an expense. You bring it here. Carriage outward. Carriage outward 3,000 naira. Now you now move down. We have wages. Wages and salary are what treated as expenses, as you know. Some administrative expenses. Wages is treated as administrative expenses. Now wages and salary, you bring it here. Wages and salaries. Wages and salary. How much is wages and salary? We have 11,000. But remember, wages and salary is 11,000. But in additional information too, they told us that outstanding wages. We're told that outstanding wages is 2,000. It means these outstanding wages will be added. Any outstanding expenses should be what? Added to the current year expenses. So it means you are owing last year. Now it means that the amount of money, let's assume you are owing, you have to pay house rent of 100,000 last year. You now pay 50,000. It means you are owing 50,000 last year, right? For now this year, how much are you supposed to pay? Is what is the addition of the amount of money we were owing last year plus this year house rent. Therefore, you are going to add outstanding wages. The treatment is what? Outstanding expenses are to be added. Then you add this 2,000 naira to the current outstanding wages, to the wages and salary, which is what? 11,000 naira. Now, so 11,000 naira plus 2,000 naira. What do we have? 11,000 plus 11,000 naira plus 2,000 naira is equal to 13,000 naira. We have 13,000 naira. Now, the next thing on point here is discount allowed. Discount allowed is a price reduction. Discount allowed is a price reduction given to our customer who actually committed himself or herself to bulk purchases. Now here it's an expense to us, so discount allowed, which is 3,000 naira, we bring it down here. Discount allowed. Discount allowed is 3,000 naira. Now, the next thing we are going to look at here, let's move downward. We have used this one, bank interest received. You save your money in the bank. Now, the bank is now paying you interest. It's an income. You add it to your gross profit. Bank interest received. Bank interest received. How much is bank interest received? 1,000 naira. You add your 1,000 naira here. Now another thing here we are going to look at. Now this is the continuation. This is the continuation of the account. We stop at discount allowed here. We stop at what? Discount allowed here. So this is the continuation of the account. Now we stop at what? Discount allowed. The next thing is what? Bad debt. Bad debt simply means unrecoverable debt. So you actually dispose a particular good to customer and the customer refuses to pay or the customer die. Such as amount of money that customer is owing you is treated as bad debt, unrecoverable debt, an expense to us. Bad debt. How much is bad debt? 500 naira. Our bad debt is 500 naira. So the next thing is we have to turn in what we have used that. Turn out what we have used. We have done that. Now stock, closing stock, we've used that. At the same time, outstanding wages, we have treated that. Prepaid insurance, we have treated that. Now we now move downward to what? To depreciation. We move downward to, now looking at the question here, they told us that depreciation on building is 20% and motor vehicle is 10%. Remember from the question, building, the cost of the building was 50,000 naira, while the cost of motor vehicle was 40,000 naira. So we are know that depreciation simply means a reduction in the value of an asset, in the value of qualified capital asset, and as such is treated as an expense in the P&L account. Now what I'm going to do, you calculate your depreciation. We have depreciation on building. Depreciation on building, which is what? Depreciation on building is 20%. 20 all over 100 times how much? 50,000 naira. So 20 all over 100 times 50,000 naira. So 20% of 50,000 will give us 10,000, right? Give us 10,000 naira. 20% of 50,000 will give us 10,000. And for motor van, depreciation on motor vehicle is what? 10% means 10 over 100 times the cost of motor vehicle is 40,000 naira. So 10% of 40,000 naira simply means 10 all over 100 times 40. So 10% of 40,000 naira is 4,000 naira. So the next thing we want to look at is to calculate our net profit. How do we do that? Is to add up our gross profit plus other income. Now our gross profit was 41,000, other income 1,000 naira. Therefore 41,000 plus 1,000, then we arrive at 42,000. Here now we have total 42,000 naira. I can see that here, right? We have gross profit and we have bank, so we add them together, we arrive at what? 42,000 naira. Now what are you going to do? You add all your expenses together. You are going to add all your expenses together and take it from this 42,000 naira to arrive at your net profit or net loss. At this junction now, we have all the expenses we have here. All the expenses we have here, we have insurance 10,000. 10,000 naira plus 4,000, 14,000. 14,000 plus 3,000, 17,000. 17,000 plus 3,000, 20,000. 20,000 plus 13,000, 33,000. 33,000 naira plus 500. 33,000 naira plus 10,000, 43,000. 43,000 naira plus 4,000 naira, 47,000. 47,000 plus 500, 47,500. We have what? 47,500. It means that our expense, it means that total expenses is more than our total income. Here we have 47,500. Total expenses is what? 47,500. While total income is what? 42,000. It means that the business incurred loss, or the business made loss during the operational activity. Therefore, what I want to do right now, the best thing to do here is to take, since expenses is more than income, then we have net loss. Here you bring down your net loss. You bring down your net loss. So the total income was 42,000. So 42,000 naira minus 47,500. Then we have a balance of net loss of 5,500 naira. So our net loss is 5,500 naira. So when you add it, 5,500 naira plus 41 and plus 1,000, then you have a total of 47,500. 47,500. All right. So that is all about trading profit or loss account. Your notes and your assignment, including this video, you get it on Google Classroom. I will be open for any questions and recommendations from you. So please copy your notes and ask questions. So you can see, in summary, trading profit or loss account is as old as man, and it's very simple as ABC. Thank you very much. I love you all. Remain at home and stay safe. Miss you very much, and I wish to see you soon. God bless you all, Chartered Accountant.